Hi everyone. Good morning, good afternoon, good evening. Welcome to this session on understanding financial abuse against women and girls at the Financial Inclusion Week. We have 45 insightful minutes ahead, asking an essential question to our panel and audience. Why should the financial sector care about financial abuse and what can it do to address it? As we know, and have also been hearing from other speakers during the Financial Inclusion Week, great strides have been made in economic enablement of women through financial inclusion, and financial service providers, of course, have played a very important role in this. However, as we hear, there is also growing concern that this process, while improving the outcomes for women, might also bring some perhaps unintended harms for a section of the women clients, and that financial inclusion initiatives, while aiming to shift household power dynamics, may unintentionally exacerbate the risks of intimate partner violence. To the question of whether or not the financial sector should care, it is safe to believe that the answer is yes. But the more critical question is, what role can financial institutions play? And is it just a client protection issue? Or is there an opportunity to improve products and client outcomes? To explore this, today we have an expert panel. We are joined by Bobby Gray, Senior Director of Grameen Foundation. We have Ryan Burke, who leads the Empower Finance program at IFC that's working with banks in Southeast Asia to address financial abuse. Ryan also comes with extensive experience at the Commonwealth Bank, working on addressing financial abuse in Australia. And we have Amelia Greenberg, Deputy Director of SPTF Series, an expert on client protection. I am Swati, and I'm the thematic lead on financial abuse at FinEquity, a global community focused on women's economic empowerment through financial inclusion. Next slide, please. Now, before we dive in, let's align on what financial abuse is. Over the last 2 months, FinEquity facilitated a working group to discuss some of the questions we are addressing today. We reviewed the definitions of financial abuse from other countries and especially the ones used in UK, Australia, and also from some of the research in the academic world, and then adapted it to the context of the financial inclusion world that we work in. Next slide, please. We define financial abuse as a set of behaviors that are aimed at controlling an individual's ability to acquire, use, or maintain financial resources and are significantly and adversely impacting their financial security and self-efficacy. Now, these behaviors could include tactics such as restriction, exploitation, or sabotage of an individual's financial resources. And by resources here, I mean personal assets like financial information, confidence, and efficacy, or even social resources like social networks and mobility, which have serious financial implications, as well as tangible resources like financial services, income, even business profits or valuable assets. What's more important to note here is that these behaviors are grounded in coercive control and are repeated over time, making a significant impact on these financial resources for the victim survivors. Financial abuse, of course, affects a wide range of vulnerable population. It could be influenced by factors such as gender, age, disability status, or whether people have migrant or refugee status could make them more exposed to the risk of financial abuse. What we are focusing on today is the financial abuse of women and girls, which is closely linked to intimate partner or domestic violence. So, looking at abuse of women and girls, financial abuse of women and girls within the setting of intimate partner violence or domestic violence, which means we are looking at the abuse or abusive tactics perpetrated by family members or intimate partners. We see that this is often enabled by gender social norms that limit women's financial autonomy, and the fact that the same gender norms reinforce ideas around who controls financial resources and also the sense of entitlement around finance, which not only obscures but also reinforces financially abusive behaviors. This in fact makes it, as research has shown, more difficult to detect and change such behaviors compared to other forms of abuse. Moreover, the third part of this is that the financial systems may enable these behaviors, where financial products lacking adequate safeguards and gender sensitive design can be misused by perpetrators, allowing financial abuse to occur through some kind of manipulation of these financial systems. So there is an opportunity to re-examine financial products and processes and address these existing yet hidden risks while ensuring an approach which is more survivor centric. Next slide, please. The previous one. Yeah. Yes. Now, the tactics used, as I mentioned, the tactics used in financial abuse could fall into these three categories, and I would like to explain this a little bit. So, first is restrictive tactics, which could be preventing access to financial to services or information. For instance, a partner or a family member prohibiting women from attending bank or savings groups meetings, or even monitoring transactions or blocking access to accounts. Second is exploitation, which misuses or depletes a woman's resources, such as by taking control of her income or coercing her into debt, and then refusing to help her with repayments. Lastly, sabotage involves tactics that damage their financial resources, such as ruining their credit scores intentionally or destroying assets with the intent of causing harm or even damaging financial documents or identity documents or other things which are necessary to make use of financial opportunities, resulting in long-term financial instability. For sure, I'm sure the audience might relate to some of these behaviors anecdotally from your work in the field with the clients, but we might not have enough evidence to understand the extent of the issue. Next slide, please. With that, I would stop there and I would like to turn to our panel, starting with Bobby, who has been engaging a lot on researching on this topic and also engaging with the sector, discussing on what this means for the financial inclusion stakeholders. So turning to Bobby, if you can tell us a little bit more about what Grameen Foundation is doing on this topic, and what have been some of the key learnings, perhaps even some aha moments along the journey, because I know there has been a journey. So if you can share your insights based on that.
Sure. Thanks, Swati, and good morning, good evening, everyone. It's a real pleasure to be here. As I've often said, this has been a little bit of a passion project of mine for the past probably year and a half, kind of digging into the literature and the experiences around financial abuse. Grameen Foundation had the opportunity to be part of a large consortium of organizations that were tasked to integrate women's economic empowerment, women's peace and security, gender-based violence, and the rule of law. And a lot of the approaches we ended up taking, kind of focused on equipping financial service providers to raise awareness or, conduct education on gender-based violence and link their clients to existing referral networks such as the police, the health services, social services, et cetera, just to be able to equip them with information as to how they could support clients if they revealed that they were experiencing gender-based violence. As part of the definition of GBV, of course, economic violence is a recent entrant into the definition. I think I discovered some research that said it was maybe only about 10 years ago that this definition was included. And so we saw it as we were doing this work, but there wasn't a lot of discussion about what it meant. But we kept thinking there's got to be something there with this piece of, this form of gender-based violence and its potential relevance to the financial services sector. So in a subsequent project, we had the chance to test out an economic coercion scale that was developed by Catherine Yacht and others at Emory University. And if you'll go ahead and go to the next slide, I just want to share a little bit that came, out of that. Hopefully you'll be able to see some of this. It's a little bit small, but when we did the baseline, we had probably about 8 questions that we tested out, and the levels of economic coercion were pretty low, which was surprising because the statistics in Honduras are quite high of both, sexual and physical violence as well as economic violence. And so at the inline, we went back to there's a survey that was developed for Bangladesh. We went back to the survey questions and added some additional ones in our inline. So this is just inline data for the women. And what I wanted to be able to show is just kind of, there were 2 indicators in particular that were higher than all of the others. So about 35% of the women had indicated that their partner had kept information on household finances from her and that he had prohibited her from studying, training, or attending informational meetings. So these are two forms that were the most prevalent, among these women. But then you see there's almost about 5% of the women that were experiencing all of these forms. Her money was being taken without her consent. She was lending money to him without him paying it back. He was demanding to know how she spent her money, et cetera. So I think this starts to give us some sense of the types of, forms of financial abuse that women could be experiencing. But I really think that as we look at this from the financial services perspective, we need to think about the types of questions we should be asking that really help us think about this customer journey and where the risks are greatest along the way. So that's, one thing that I'm, really looking forward to seeing, the sector do is a little bit more research. I think the other, point I might make that I think, to inform this conversation is, at least from what, the research has shown for me, is that I think all the work that we've done on client protection and social performance management within the sector already provides us a pretty strong foundation from which to work from. So I don't think we have to look at this as this is a special project, but maybe it's an effort of looking at what do we already have? How can that inform what we need to tweak, what we need to improve, et cetera? One of the experiences that's been shared so far in some of the discussions with FinEquity, the idea that husbands may know the loan officer that a woman, engages with for her credit, and he may be able to ask her, how much money is she getting, how much is going into her account, or he may have access to, wanting information about how much is in her savings account, et cetera. So, these are just basic client protection practices that have to be, followed up on, et cetera. But at least it helps, as we talk about this, we can look at it from this perspective, like why would it be harmful for a loan officer or somebody in the bank to give information to a spouse about an account that he's not on? So I think those are just some simple, these are just some examples that have come up that I think illustrate some of the, the tasks that we have ahead of us. So I'm going to stop there because I'm really excited to hear from Ryan and Amelia and the rest of the conversation. Thank you.
Yes, thanks a lot, Bobby, for sharing those insights. I think, of course, there is need to, as we've been discussing, there's need to collect more evidence and do more research and understand how these behaviors can be identified. As you mentioned, some of these do remain hidden under gendered social norms. And with that, yes, I'm also looking forward to hearing more from Ryan. And Ryan, perhaps as you share with us more about the Empower Finance program and what is it that you are doing and the priorities of the program, you could also reflect on some of what Bobby said. And we have Emilia lined up to talk about it more from the perspective of the existing client protection principles. However, the stage is to you, Ryan. Thank you.
Great. Thanks so much, Swati. And it's also really great to be here to share some of the work that we're doing at the International Finance Corporation. So to give you a little bit of background, the IFC is part of the World Bank Group, and it is the largest global development institution that invests heavily into the private sector, and in particular into financial service organizations. So when we think about financial abuse and the role of the IFC in investing in emerging markets, mitigating those risks that play out when people do experience financial abuse from a bank or an institution's perspective is really one of the key drivers behind us focusing on financial abuse. So for quite a long time, IFC's Gender and Economic Inclusion Department has had a focus on addressing gender-based violence from an employer or workplace context. And it's the addition of focusing on financial abuse is just a natural extension of a lot of that work. And so we've really been able to leverage the convening power of the IFC and that previous experience in addressing gender-based violence and working with the private sector to build the Empower Finance Alliance or initiative. So what that is essentially bringing together 9 banks from across 5 countries where they actually have a potential impact of reaching up to 30 million customers across their customer base. to really bring them together, to introduce them to what financial abuse is, and some of the actions that they could take to really, I guess, take their first step in addressing financial abuse. And what you're looking at on screen is a couple of quotes from our launch event, which we had recently in Bangkok, where we brought the banks together to share and introduce them to financial abuse. And so over the next, say, 5 minutes, I'll really quickly go through how we structured that initiative, and where we're up to now, and what we're going to be doing into the future. And so, as you can see, the banks and the countries that they represent are on screen. And it's been a really amazing experience bringing together these banks to share with them what financial abuse is, but then how it plays out in terms of the misuse of financial products and services. As we know that this is one of the main ways that abusers do inflict coercive control over a victim survivor, as we've heard Swati and Bobby reference already. And so over the next 18 months, what we will be doing with the banks is helping them to select 2 actions for them to implement at their bank to start to make change. If we can go to the next slide, please. The way that we are doing that is using the financial safety by design process, which was built by Catherine Fitzpatrick from FinEquity Ventures. And it's a very simple process of 3 stages of understanding product misuse, which is looking at your own products and services, and most importantly, the lived experience of victim survivors around how they have been financially abused through a bank or a financial services products or services or technology. The second stage is around designing for safety. And so this is looking at how can we identify how a product is being misused, but then put in place the interventions to fix that product or service for safety. And then the third pillar or step of the process is around communicating acceptable behavior. And all of that is really underpinned by customer support. So what we're doing is using this framework to work with the banks to help them to understand and learn about how financial abuse impacts their customers, what their products and services which of their products and services are being misused, and then how can they take those actions and communicate the acceptable behavior to their customers. If we can go to the next slide, please. So what you're looking at here is, we've lost the title, but essentially what this is how we're structuring the work with the banks. So in stage 1, this is all about understanding product misuse, supporting the banks to listen to lived experience. And we did that at our launch event by sharing stories with the banks and asking them to hear how financial abuse played out, what were the different behaviours, and what could a bank have done within that situation to make it better. We're also running an employee pulse survey with the banks. So they're in the process of rolling that out across their institutions for their employees to complete. It's a very short survey with a number of behaviours that we've identified with a University of New South Wales to really understand how financial abuse impacts their customers and also the observations within the communities. We are also engaging with the local CSOs within those countries and connecting the banks with the CSOs so they can continue that education piece around lived experience and to hopefully create a really strong partnership with those community organisations, as we know that they are at the forefront, they're at the front line of working with the community and have a lot of knowledge and advice to give when we look at product interventions and fixing products for safety. And then the last piece within the first phase is really looking at customer transactions. And I think we've heard a little bit about it already today, how we can identify where there may be particular behaviours or maybe payment descriptions that are being misused to help the banks identify how their own products and services are being misused. So that first phase really is about discovery. It's about understanding what the issue is, looking at the existing products and services and how they're being misused by perpetrators or abusers. The second phase, which we are not into yet, so that will kick off later this year. So we're really sitting within that discovery at the moment with the banks. So the second phase is around designing for safety. And so what we will do here is help the banks to identify 1 or 2 products or services that they can start to look to change or improve for safety. And I think the comment that Bobby made around looking at client protection principles and how some of those interventions have been put in place, that's exactly the space we're playing in. So what can we use that's had success over here. How can we use that over here for financial abuse to ensure that we're creating high impact with low effort within the banks as much as we possibly can. We'll also support the banks and enable them to build a roadmap or a change mode roadmap to speak to their internal colleagues and departments to start to put those changes in place and then implement them, and so that we can measure what change may happen off the back of it. And then the third phase is all around communication. So later on in late December, next year, we'll actually communicate the findings of this work and the project so that we can start to educate more broadly across the financial services industry, across the Asia Pacific region, to share what we've learned and how other banks can take action as well. Would you mind going to the next slide, please? And so this slide, I won't go into it in detail, but it gives you a sense of how we're educating the banks. So we have a number of online workshops where we're taking the banks through key pieces that align to that previous slide of the different phases. So these are the workshops that we're running, and we've currently run 2. We're about to do our 3rd one next week. And educating the banks on these key topics to help them go back to their institutions to either collect the data, have the right discussions, and then put in place the changes. In amongst those online workshops, we're also producing very short, what we're calling audio learning. So you could think of them as like a podcast, which they only go for about 10 to 15 minutes each, which we will send to the banks before each workshop, and it will give them the key outline of the topics that we'll be talking about to get them equipped and ready to implement once we finish the workshop. So it gives you a sense of how we're structuring that initiative. But I guess some of the key takeaways for me over the last, say, few months as we've been rolling this out is that once we gave the banks an indication of what financial abuse was and what some of the behaviours were, we definitely saw them understand that this was an issue and actually saw that these behaviours were already happening within their customer base. So we were able to give them, I guess, a word or a label for what financial abuse is so that they could now start to implement the changes at their bank. The connection to lived experience has also been really important to really bring to life the impact to the individual and how what might be a simple transaction for a bank could actually be something really meaningful for a victim survivor. So bringing in that lived experience has been absolutely critical. And then the connection with the CSO organization in their local CSO will continue to help them understand that lived experience and to build a long-term partnership where they can work together. In terms of the pulse, we have got some high-level feedback from those responses. The banks are still rolling them out, so this is not indicative of all of the bank responses. But what we are seeing is some of the key behaviours of a spouse, partner, family, or community member taking control of a customer's online banking without their knowledge, people being prevented or discouraged from opening or having their own bank account, people being pressured or forced to sign financial documents, or people actually being pressured to deposit their income into another person's account, so a family member, spouse, partner, or community member. So it's been, in one way, great to get this data and this feedback from the Pulse, but it's also, I guess, continues the alarm and the impetus for us to make change in this space, to keep working and supporting those banks to take action. And in terms of taking action, many of the banks have really taken on board what we've shared with them, and some of them have absolutely been outstanding in their efforts. So some of the banks have already had CEO discussions, they've run focus groups, they've all done, some of them have done all employee town halls, securing budget. So there's a lot of activity that's come off the back of us introducing financial abuse, because I think the banks see this as an issue because they see it in their customer behaviour and what they've probably been dealing with for a very long time. But we've been able to give them that label to help them now to take action. I appreciate that was a lot of information very quickly. So Swati, I'll hand back over to you.
Yeah, thank you, Ryan. I know there is a lot to share, and I'm sure going forward with the project, we would have a lot of insights that the sector could build on. And clearly, like from what you said, the importance of understanding lived experiences and to get the financial institutions to go and sit together and look at the lived experiences is a key piece here. And then going back and looking at the product and processes, and like Bobby also mentioned, looking at the customer journey to really understand where the guardrails might be down, and there is a risk of financial abuse for clients, especially women. And on your point of building upon the systems that already exist, both of you mentioned already, and with that point, I would request Emilia to reflect upon what the other speakers have been saying, and think and try to put that in the context of the existing client protection principles and all the work around social performance management, and share with us how you think it intersects, and what are some of the lessons that we could learn from that initiative to further this to further the work on addressing financial abuse.
Sure. Thank you so much. Abby, if you can go to the next slide. For those of you who don't know SPTF and Cerise, we are a standard setting organization. And Abby, I'm not sure. Yeah, there we go. And we already, Bobby talked about, there's a strong foundation already in our sector for customer protection and for social performance. This is a piece of it. Our work in standard setting is focused on improving the customer experience, and we talk to stakeholders in inclusive finance around the world. We understand what their lessons learned have been about good practice, what works and what doesn't, to mitigate customer risk and create financial products and services that benefit customers. And we gather all of that information into a single document, which we call the Universal Standards for Social and Environmental Performance Management. And this is now a free public good, a resource, so organizations don't have to start from zero and learn all these good practices on their own. They can just benefit from the learning of their peers, read this document, understand what practices to put in place to protect their customers from harm. And it's also a tool then to disseminate. Once we've gathered all these good practices from around the world, we put it in a single location, then we share it back out. And so this is a logical place to embed some of the learnings about financial abuse and specifically management practices that financial service providers could implement in order to mitigate that risk. And as an initial thought exercise, what we did was look at this, the existing practices in the manual, to see if any of them already would be helping financial service providers address this risk. And the answer is yes. So if you go to the next slide, I'm giving you the places in the standards where we already see some practices that, again, would mitigate the risk. And it starts in dimension 1, which is the strategic dimension. We have an indicator in there that says the provider defines a do no harm strategy that articulates how it will mitigate the social risks connected to the use of its products and services. And within that, one of the details is to investigate the possibility of creating negative effects on clients and their households. So this risk of opening an avenue for financial abuse falls within this general discussion of what are the potential unintended negative consequences of providing financial services. Also in that dimension, we have indicators talking about collecting data on customer outcomes, and we say to do it in a quantitative and a qualitative way. And the qualitative data often starts with the question of just has your access to financial services improved the quality of your life or not? And when customers discuss any negative changes, this would be an opportunity for them to mention coercive or abusive behaviors that have been made possible because of their ability to be a client of the financial service provider. So gathering that data, which we already stated do on negative as well as positive outcomes, could give some insights into the scope of the problem. And finally, up in that dimension, we say to analyze outcomes by segment, by customer segment, meaning separate men from women, separate by age, separate rural from urban, and see if you see potentially more positive or negative outcomes for certain segments of customers. And the most vulnerable customers might be experiencing negative outcomes that the less vulnerable customers do not. So this is a way of highlighting it. In the leadership section, this is a lot of lines, but the upshot is we say both at the board level and at the management level, there needs to be a review of the outcomes data that you're collecting. So after you go and ask customers, what are the effects of using financial products and services, then that's information that both board and management need to do their jobs of directing the strategic and operational activities of the institution. Next slide, please. And then when we get into product design, which is our dimension 3, we have an indicator saying the provider investigates whether stresses at the household level make it more difficult for clients to use its products and services. And then in the barriers essential practice, we see remove barriers that prevent access. And this goes to the definition of financial abuse that Swati shared, which is part of it is the customer prevented from acquiring access, and the others are about use of them or maintaining their access. But the barriers to access can be because the delivery channel is such that the woman cannot gain access without the involvement of a different family member, or she simply doesn't have the freedom at all. So sometimes having a more adapted set of possible delivery channels can break down that barrier for acquisition of financial services. In dimension 4 on customer protection, we have indicators about data privacy and data rights, including telling clients how they will share their data and with whom, and their right to data privacy, and also training customers on keeping their data private. And finally, in dimension 5, which is on human resource development, we have some indicators about training employees on the social goals, and this would incorporate training them on risks of financial abuse and what their role is to mitigate that. And also, when you train employees on client protection, we have some details about not only explaining pricing and terms and conditions, but also verifying that clients have understood. And I think sometimes they haven't, and that leads to other people being able to take advantage of them. And then also explaining confidentiality and data sharing policies. And I'll close what I say with a general reflection that financial service providers can, as a sort of knee-jerk initial reaction, think, why should I be getting involved in this? But as we heard Ryan say, once they understand the nature and the scope of the problem, and especially if you do some surveys of your own customers and you realize that it is a problem they're facing, you can see the relevance. And certainly in the prevention of use, that is a customer question where if because of abusive behaviors, people can't even have access, that's a customer you could have acquired, but you didn't because of the barriers you have in place. And then with the actual use of the products, if somebody else is controlling it, it's much more likely for that to produce a negative outcome, both for the financial service provider and for the customer. So in obvious cases alone, it's not going to be reimbursed if someone doesn't have control over how her loan funds are used. And that is a negative financial outcome for the financial service provider as well as for the customer. But even things like savings, if she doesn't have control of her savings, or if someone else gets access to her savings, why would she save with the financial institution that's not helping her? And a last example I'll share is we worked with a partner years ago that had digitized wages for mostly female workers, and they'd previously been paid in cash. They started to get paid directly through deposits to their bank accounts, and the provider thought, isn't this great? They don't have to wait in line anymore. It takes away the safety risk of holding cash. But they hadn't asked the women about it, and the women, it turns out, had been keeping a portion of their cash salary for themselves for their own independent use, and had been bringing home the rest of it to the household, and had not necessarily informed their husbands of that. But when they switched to digitized wages, the husbands were seeing the deposit amounts in the accounts and realizing that the women had been withholding a portion of their salaries for their own personal use, and it created friction in the households. And it was a decision on a new delivery channel and a new design of offering financial services done without the knowledge or input of the customer, and that led to a negative outcome for the customer. So that's just an example of why it's so important in product design to consult the customers who are supposed to benefit from your decisions before you go ahead and launch that new channel or product. But I'll stop there because I definitely want to hear the discussion with the audience.
Thanks a lot, Emilia. Thanks for reflecting on the client protection, the universal client protection principles. And that's where since that's one initiative that has been successful in getting the sector on board to adopt these principles and really prioritize client protection in a very systematic way. We have a lot of time for interaction with the audience. So if anyone has questions, they could write them in the chat, and we could direct them to the relevant speakers. While I look through the questions, I do have some questions, and I'm sure Bobby and Ryan also have questions for the rest of the speakers based on what they've been hearing. Perhaps first to go to you, Emilia, and Ryan, you could follow that up. And what I'm hearing from you also is that so one thing is that it's financial abuse provides an additional lens, which perhaps we saw it was happening. However, financial institutions were not able to put a label on it because this is something that is more within the concerns of household financial management. However, this allows now to re-examine the products and delivery processes throughout the customer journey to see where some safeguards could be included to prevent abuse, both to improve client outcomes as well as to manage some of these risks. And in terms of products, like the most obvious one being debt, that's where coercive debt is something that comes to my mind as a very sort of the first example of where a financial product could be misused. But what are some of the other situations, other financial products where you feel this they could be a risk from your work, Emilia? And then perhaps Ryan, you could reflect on that based on the work with the banks.
Yeah, I will. The first thing that comes to mind is just the digital. With digital finance, a lot of products are now available via a phone, and in some households, particularly poor households, the woman doesn't have her own phone, so she's sharing her phone. So anything that you're doing, from a payment to a money transfer to any kind of all the financial activity is done on a device that she shares. And I think that opens up a channel for abuse, and also the technology itself. Often the customer is not as familiar with it, needs to ask family members for help just to navigate a digital menu. And so that also opens up an avenue for someone to gain more access than they really should have to the person's financial activities on all transactions. And even just the data of how much money they have is, the account balances are available through that shared device. So I think as we move to an increasingly digital definition of how to offer financial products and services, there's the huge potential upside of greater outreach and overcoming some of those barriers that have to do with mobility limitations, where someone can transact without having to leave her home. But at the same time, if we don't think of really educating customers on digital literacy, and also making channels available that don't potentially require a smartphone, if you have a less complex device that can nonetheless do it, it's more likely that the woman would have one of her own to use. And then I also think the rights, sort of. Sometimes people don't know their own rights, and if you educate people about confidentiality of data, and also the consequences of not repaying a loan, for example, or any of the avenues that they have to ask for help, sort of the universe of the good and the bad, all of that knowledge, I think, breaks down some of the risk that she faces of not knowing her rights, not knowing necessarily how to operate, and then not keeping her data confidential really opens her up to abuse. But I'll stop there. I'm curious to hear Ryan's response as well.
Yeah, it's really interesting working with the banks across the region. We are hearing lots of different ways in terms of lots of different financial abuse behaviours, and where products and services of a bank are intersected. Personal loans and mortgages are probably the key product that we're hearing, as well as accounts and transaction accounts. But it really depends on the market and what products they provide to their customers. So, for example, credit cards may not be as relevant in one country versus another. So we're in that process now of collecting that information back from the banks around what are the key products and services that they're seeing. And the Pulse survey that we have rolled out will also give us some really good insights into the types of behaviours they're seeing in customers, and also within the community that the employee lives. I think it's, to your point, Amelia, the technology piece is very real as more banking becomes digital, and it's just the norm. So going into a branch in most places isn't something that happens very often. And so we actually, when we were starting the project, we thought about how do we introduce fintechs, and we decided to keep the project more broad in terms of the traditional bank, and what we could do with that type of environment, because it'd be similar product lines and similar teams that we could work with to see what impact we could have. In the report that you actually posted into the chat, so the Financial Safety by Design, in the appendix of that report, there's a really great table that has a range of different products. So FinEquity Ventures actually went through and mapped out the different products, what are the risk of misuse, and what are some of the solutions that a bank could put in place to fix that. And it's a really great way, I think, for a financial services provider to do their own audit. In terms of what products do they hold, how it could be misused, and then what could they do to strengthen it. But it definitely goes back to Amelia's point, and also the point that I was making around making sure that the lived experience of your customers is woven through everything that you do, so that you know the intervention that you're putting in place is actually having the most impact and is actually solving the problem, versus it just being another activity that gets rolled out. So yeah, we're really excited to see what comes of the Pulse, so that we can get more detail around the different products and services. But from what we're hearing in the banks, in summary, is transaction accounts, joint accounts, and loans are the key ways that they're being financially abused.
Yeah, maybe just to finish up, because I know that we're running low on time. It's not so much in addition to the types of questions, it's just maybe a question that we've continually gotten is this point of what's the minimum that a financial institution has to do to demonstrate that they are protecting their clients from financial abuse. And I think, your reference to the examples that are in that report are just, I think, are perfect starting points for organizations to look at some practical steps that they can take, everything from just improving some of your financial literacy training to doing audits of products, raising awareness of staff of what financial abuse is, so that they know what they're looking for and how clients can protect themselves and their accounts from that. So I feel like there are really practical steps that we can take, and baby steps along the way that, I kind of see it as there's a spectrum of activities that an institution can choose to, take. You can either do the minimum or go deep into the issue over time. And so hopefully it's something that as we start working on it, it doesn't appear to be this real behemoth activity that an institution has to do, but some important tweaking, along the way. So Swati, I'll just turn it back over to you to close us up.
Yes, thank you so much, all of you, for sharing all of those very pertinent points. And just to wrap it up, I know there are some of the questions, hopefully we have managed to answer for the audience during our discussion today, yet many remain unanswered. So we are using this session as an invitation to the broader financial sector audience to look at this question, and we encourage them to reach out to the panelists today, or have a dialogue within their institutions to really see if this is something that can be addressed within the existing systems, and if there is opportunity to do some more research, perhaps even to add some extra questions to existing surveys or client feedback systems. There could be easier ways to gather this data. And as a next step, we have another opportunity to continue this conversation. So some of us, including Bobby, and she'll be joined by a few other colleagues, and she's moderating a session at the European Microfinance Week. And this is on November 14th. I believe it would be streamed online as well at 1 p.m. Central European Time. So hopefully we get to see some of you during that session to continue the conversation forward. Thank you so much for this opportunity, and thank you very much to the speakers.
Have a good day.
Thanks, everyone. Bye. Have a great weekend.
Thank you.